Bitcoin is hovering around $31,000, which is a 2% reduction from yesterday, and down 12% over the last 7 days. It seems to be sitting in a consolidation phase, and we'll have to see how long it will go before it makes its decision, either up or down. The volume is again pretty large, $56 billion exchanged over the last 24 hours. And this is the Bitcoin briefing. In yesterday's show, we discussed how Lloyd Blankfein, from the ex-CEO of Goldman Sachs, claimed that if he was a regulator, he would be hyperventilating right now in the face of Bitcoin's success. In today's show, we're going to go a little deeper on that theme and look at what the top, I guess you could call them, titans of regulation, Janet Yellen of the Fed and Christine Lagarde, are saying right now about Bitcoin, and how we as a community can try and defend ourselves from what is the inevitable increasement of government interference and regulation into, well, I guess a space that they really shouldn't be in. And we'll see whether or not these hints at a roadmap for global regulation will have the intended effect, whether or not it will impact price and our ability to use this currency in the way that we've been able to do in the last decade or so. So, with that in mind, let's start with Janet Yellen of the Fed and see what she's saying now about Bitcoin in 2021.
One area of growing concern, for example, is the potential for terrorists and criminals to use cryptocurrency to finance their activities. So, Dr. Yellen, can you outline some of these emerging technological concerns and how Treasury should combat new forms of terrorist and criminal financing?
Senator, I think you're absolutely right that the technologies to accomplish this change over time, and we need to make sure that our methods for dealing with these matters, with terrorist financing, change along with changing technology. Cryptocurrencies are a particular concern. I think many are used, at least in a transactions sense, mainly for illicit financing.
I mean, this is something that really, really, really annoys me, actually just pisses me off, is the ease with which Janet Yellen can say that the majority of transactions that are happening on the network are somehow nefarious and illicit. This really is an uninformed opinion, really. I would have thought somebody of her stature would be a bit more careful with her words, because it's an attack on all of us. It's, I sent some coins to a friend yesterday. It was a totally legitimate transaction. Does that fall under their notions of illicit? What grounds does she have to make such a statement? It's, I mean, obviously, I'm sure there is, of course, money laundering and some nefarious stuff that's happening on the network, but it's because we're dealing with money, and the proceeds of crime and other things are transferred using some forms of money, whether or not they're dollars, euros, yen, Bitcoin. It doesn't really matter. And as Bitcoin grows, yeah, there probably will be more on it. But as Andreas Antonopoulos has said many, many times, that the real currency of terrorism and drug dealing and pedophilia and all this other stuff is dollars. Terrorism is conducted with suitcases of dollars, not Bitcoin. If you're going to do crime, I couldn't think of a worse place to document that crime for all history by putting it on the blockchain. It's absolutely madness. So.
And I think we really need to examine ways in which we can curtail their use and make sure that anti-money laundering doesn't occur through those channels.
Yeah. Anyway, what's interesting, though, is to see how Janet Yellen has not changed her opinion, but at least it seems to be higher up on her priority list. Because 6 years ago, when she was discussing Bitcoin, she said clearly that the Fed has absolutely no way to regulate Bitcoin, because there's no point of attack for it to regulate. There's no central issuer, there's no bank, there's no houses to raid. as she says in the clip, which we'll roll now.
I think it's important to understand that this is a payment innovation that's taking place entirely outside the banking industry. To the best of my knowledge, there's no intersection at all in any way between Bitcoin and banks that the Federal Reserve has the ability to supervise and regulate. My understanding is that FinCEN and the Department of Justice have, one concern here with Bitcoin is the potential for money laundering. So the Federal Reserve simply does not have authority to supervise or regulate Bitcoin in any way, because there is no central issuer or network operator to regulate.
Now, I'm more worried about the European Union than I am with the Fed, because the European Union does not value freedom to the same extent that Americans do. Whether or not that's real or not, on paper, America is the land of the free, at least in an aspirational sense. Whether or not it falls short of that in a practical sense. But the European Union is not set up like that. We don't have these values anymore. It's managerial, interfering, quite dictatorial in many ways. And it does worry me a little bit that Christine Lagarde has this on her radar, and she's moving towards saying that a global response is necessary, and puts forward a roadmap that perhaps they could regulate through the G7, and then they could move out to their other allies, and then try and create this global regulation. Because as she says, if there is a way to avoid regulation, people will use it.
It is it's a speculative asset. By any account. I mean, when you look at the most recent developments upward and now the most recent downward trend, for those who had assumed that it might turn into a currency, terribly sorry, but this is an asset, and it's a highly speculative asset, which has conducted some funny business and some interesting and totally reprehensible money laundering activity. I think that there are criminal investigations that have taken place that I'm sure will continue to take place that demonstrate it very clearly. And there has to be regulations, and this has to be applied and agreed upon. It's a matter that needs to be agreed at a global level, because if there is an escape, that escape will be used. So I think it needs to be if anything, it shows that global cooperation, multilateral action is absolutely needed, whether it's initiated by the G7, moved into the G20, and then enlarged.
Now, this could set Bitcoin back quite a lot on paper. Now, I suspect that people like Christine Lagarde, Janet Yellen, and other regulators will think this may be a successful course of action in restraining Bitcoin. But there is a huge risk for these regulators, because if they fail to properly regulate, and it may make the case for Bitcoin being even more anti-fragile than it was before, especially when we start to include ideas of game theory and competition amongst states. Because it's all well and good for Christine Lagarde and other regulators to start saying we need global action against Bitcoin and everyone's going to be on the same page. If they could do that, and every country in the world was to agree that, we're going to have KYC on all of these wallets, and we're going to nationalize mining and not allow anyone to hold their own coins in non-custodial accounts, well, that might actually be successful if they were to do it as a unified global government. And I guess that's one more reason not to have a global government, but that's a different topic. Now, the way that this could backfire is by states that are already crypto and Bitcoin friendly, like Japan and Singapore and other places, that they don't regulate Bitcoin to the same extent as other places. And as we've seen, innovation just moves from highly regulated New York and it goes to Singapore or Tokyo and other places. So unless Christine can get a completely homogenous global response, which I think is almost impossible. It's not going to work, and this is without even mentioning the fact that, as central banks possibly start moving to accumulate these currencies, it's only going to increase the adversarial nature of these sovereign states, and they may start using different carrots and sticks against each other, or trying to incentivize people with their Bitcoin moving to different states. It's a huge minefield, and as much as I don't want the regulators to start getting involved, I'm not convinced that they will be effective, because they're using the tools and tactics from previous wars fighting centralized problems. And now they need to use these same tactics, because it's the only tactics that they've got, the only tools that they've got. Really is force and sending the guns round to wherever it is they need to go. That's ultimately the only force that these people have. And when they use these tactics against a decentralized adversary, which is Bitcoin, and another thing is Bitcoin doesn't care about any of this. We care about it, the regulators are caring about it. Bitcoin doesn't care. It doesn't care if it's regulated. It's still doing its thing every 10 minutes, pumping its heart. So there is a chance that this could backfire significantly. But it's something we need to look out for, because I think the call for regulation, I'm seeing it all the time on the news. We've got more and more people. Yesterday we talked about how Harvard University have been buying Bitcoin for 12 months, and yet we have Harvard professors on the media a couple of days ago claiming that Bitcoin does need to be regulated, again because it's nefarious. It's only used by failed states and terrorists and all these boogeymen.
Do you link Bitcoin wholly into criminal activity, and do you consider the new price appreciation of Bitcoin to be speculative?
Well, I certainly think I agree that it's speculative. I've been a Bitcoin skeptic, and certainly the price has gone up, but there's sort of an ultimate question of what's the use. Is it just valuable because people think it's valuable? That is a bubble that would blow up. I can see Bitcoin being used in failed states. It's conceivable, it could have some use in a dystopian future, but I think the governments are not going to allow pseudonymous transactions on a big scale. They're just not going to allow it.
Okay, so it's quite obvious from the rhetoric that's floating around in the space that some form of regulation is coming. And as we discussed, it's a bit of a gamble whether or not it's going to be effective, but I think it's certainly coming, and it would benefit us to kind of think about where they might attack. Where is the soft underbelly of Bitcoin? Where is it weak? Right now, the on-ramps and off-ramps transferring fiat money into Bitcoin and Bitcoin into fiat money is regulated. We've already lost that battle for now. No, in fact, we've lost it. It is possible to buy Bitcoin P2P and do some other stuff at decentralized exchanges, but as soon as you try to liquidate any cryptocurrency into cash, or you're trying to buy cryptocurrency with cash, for the vast majority of people, we have to give our KYC and AML and all these other documents and passports and pieces of paper with your name on and Coinbase written on them, all of that annoying stuff. So in many ways that battle is lost, but it's also an acceptable line for lots of people. It's annoying that we have to give our passport and other information. It does kind of remove any anonymity unless we start doing using tools at our disposal like coin joins and mixers and things, but these really are tools for a semi-advanced user. For the ordinary person, passports and know your customer, I think that's a line that people can accept. However, where we start stepping into really dangerous territory that I think will massively cross a line, certainly for me, is when the government targets non-custodial wallets. I think this is the real worry, or should be a worry for the community. FinCEN have been drafting some ideas about laws which could possibly add KYC and AML layers onto transactions that are sending money from custodial accounts to non-custodial accounts, meaning that if you were to buy cryptocurrency, say on Coinbase, which is a custodial account, and you were then to move that money to your, say, Ledger Nano or your Trezor or your hardware wallet, which is of course a self-custody, non-custodial account, they may at some point put in something in place that they require extra information, extra security checks before they allow you to move money from the custodial, from your bank account basically, into a wallet that you control. And it could even go worse than that. Imagine if they just say, no, you're not allowed to move your Bitcoin from our custodial accounts to any other account that isn't registered or regulated directly by some government body. That would be terrible. And it would set Bitcoin back a lot. However, we do, as a community, have some defenses and ways we can work around it. The regulators, as regulators always do, are a step behind the market, almost by definition. So we have a little bit of a head start. And if we as a community start doing more of these things which we're going to talk about now to protect ourselves, then we're going to make the jobs harder and harder for regulators to interfere in a meaningful way. And hopefully by the time they have figured out smarter ways to regulate Bitcoin and cryptocurrencies, it's already too late. So the more that we as a community remove our coins from custodial accounts already and keep them in self-custody, where we own our own keys, the harder it's going to be for them to put regulation that stops us moving money from the regulated custodial accounts to wallets that we already hold, because hopefully a tipping point of people are in control of their own assets. So that's the first and most important thing, and it's nothing new. We all should be keeping our coins on, we all should be self-custodying our own coins. It's a must, and it's not only a must for personal, our own personal and financial safety and independence. Really, it's a defense mechanism for the whole network and the community. If we all, or at least most of us, are self-custodying, then it's going to be very, very, very difficult for them to get our coins back into these regulated accounts. I certainly will be transferring my coins back to a custodial account because I'm told to. It will require force. Which is in their control and they can do it, but it's a hell of a lot of work to come around to everybody's house that they know holding Bitcoin and forcing them to upload transact their Bitcoin back into Coinbase's wallets and these regulated accounts. So that is the first key thing that we all should be doing. And for most of you, you already will be, so that's great. The second thing that we can be doing is starting to use more decentralized exchanges to do transactions and move away from larger regulated exchanges. Now, this won't help us when we want to get money or liquidate coins or buy coins. P2P trading is still, or face-to-face trading is still an option, but it's not as convenient. The next defense, I think, will be the Lightning Network. And while that does open up another few vectors of attack, and we can have, we could have Lightning hubs which are regulated and things like that, the ability for us to be able to easily transact our Bitcoin and use micropayments will allow us, especially when linked to non-custodial accounts and exchanges that are decentralized. When we have that mixed with the Lightning Network, and we can transact in a decentralized way with other members of the community, and then we can start spending our coins in a meaningful and normal way, like buying coffee and everything else over the Lightning Network. We don't need to access those KYC and AML sort of walls that we would do if, as most of us are using Bitcoin at the moment. So the sooner that Lightning Network can be, rolled out in a more universal way. I mean, I'm here in Thailand at the moment. It's going to be a while before I can start buying things with a Lightning wallet. So, yeah, the community really needs to get this and some of the other improvements like Taproot and other things finished soon. So hurry up. And then I think there's one more final piece to the puzzle that we as a community can use to defend ourselves, and it may indeed happen inevitably. I think for lots of us that are working in the crypto space, we are starting to pay employees in Bitcoin and receive payments in Bitcoin. This is so crucial, I think, because once you can start swapping your labor directly for Bitcoin, and then you can start paying for the things you need to buy and shopping, basically, with the Lightning Network. And we also start using things like coin joins and the other tools that we have available. We don't need to use Coinbase or any of these custodial, regulated, basically bank accounts. Again, we can earn money doing what we need to do. The payments get paid directly into our cold wallets, or at least wallets that we have the keys to, and then we can start engaging in the marketplace as we would do with cash. By that point, it's going to be difficult. I mean, I'm sure there's smart people in these regulatory bodies, but as I say, they're a step behind. And if we can keep pushing the envelope and start taking responsibility for our coins, start paying each other, and hiring people and swapping labor directly for Bitcoin without cash, at that point, when the payment network such as Lightning is available, at that point, then we can, I think we could almost ignore the regulators. And what my hopes are is that kind of situation, mixed with a game theoretic rivalry among central banks and other large companies that are accumulating or have seen the light and know that Bitcoin is the exit ramp to a failed and very rapidly failing current post-Bretton Woods money system. And by that point, the regulators may be too late.